I don't think we're going to go back into fiat. I don't think it's going to be possible. We're going to have to deal in gold and silver for as long as it's going to take to rebuild trust in some kind of credit derivative of gold and silver. But it's not like people are going to immediately go back to paper because, like, look what just happened. It's going to take a long time. And in that time, you're going to want to have companies that can produce gold and silver and pay you dividends in the money that's going to be for the world. I think we're close enough to the breaking point that it could be weeks. I think it's not going to be more than a year. I realize I've said that before, but the way things are accelerating now, it's crazy.
Buy your gold and silver over the weekend. Don't wait for Monday. We got 2 more days of the quarter, and I think they're going to be big for gold and silver.
The momentum behind precious metals is accelerating, and the signals coming from gold, silver, and the mining sector suggest that the market is entering a powerful new phase. Silver, in particular, is leading the charge, a hallmark of past major bull markets where silver's strength confirmed gold's rise. Just this week, silver climbed above $46, up 8% in only a few days, while gold gained over 2%. Every year, silver has surged nearly 60%, while gold has advanced over 40%. Even more telling is the performance of mining stocks. Major indexes like the GDX and GDXJ have more than doubled this year, outpacing the metals themselves, a clear sign of conviction and institutional inflows. For investors, the window to accumulate physical metals and quality mining shares may be closing quickly, as once silver breaks $50, it could establish a new floor and never look back. PeterSchiff, a longtime critic of fiat currency and proponent of sound money, underscores the urgency of preparing for a world where trust in paper assets continues to erode. Alongside him, analyst Rafi Farber highlights the structural shift underway as inflation becomes entrenched and central banks lose credibility. Together, they point to a future where gold and silver aren't just hedges, but necessities for wealth preservation and real purchasing power. This is not the end of the metals bull market. It's the beginning of something far larger. Positioning now could define financial security for the coming years. Don't wait. Buy, hold, and stay prepared. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Wall Street is not worried about gold prices crashing, which they always were. Now they realize gold's going up, so these gold stocks are a bargain. And what's great about the gold bull market now is what it was missing before. Silver is now leading the way. That is a bullish sign. People always pointed to the weakness of silver as a lack of confirmation because all big gold bull markets, silver leads. Well, now silver is leading. Gold was up 0.5% today. Silver was up 2%. Silver closed over $46. It traded over $46.50. Silver was up 8% on the week. So if you bought silver last weekend, like I told you to, in this market wrap, you're already up 8%. Gold was up 2.2% on the week. Year to date, silver's up 59%. 59. In fact, when it was at its peak, it was up 60%. Then it pulled back a bit. Gold is up 43% on the year. And the year's not even over. We got 2 more days left in the third quarter. I think the fourth quarter is going to be the strongest yet for gold and silver. And as I just mentioned, these next 2 days, a lot of portfolio managers are going to want to show their clients that they have some exposure to gold and silver, right? Better late than never. Of course, it's not late, but it's late in the quarter. So I think they're going to, window dress their portfolios. They're going to add some gold exposure if they don't already have it. So you're going to see, I think, money coming in to gold and silver and the mining stocks over the next couple of days. By the way, that was the other knock on the bull market, that it wasn't being confirmed by the mining stocks. They were lagging. They were underperforming because in every gold bull market, the gold stocks lead the metal. Well, that wasn't happening until now. The GDX was up 18% so far this month. 18%. The GDXJ up 20%. Year to date, the GDX is up 120%. More than a double, 120. The GDXJ is up 125%. So the gold stocks are more than double, in fact, triple the return on gold. So not only are they leading, they're way out in front. So we are firing on all cylinders. We have silver outperforming gold, and we have the miners outperforming the metal, right? It's all systems go. And we're just launching off now, right? And I think when silver breaks above 50, which it could easily do next week. I mean, this may be the last week that you could buy silver below 50. Because I think once we break through 50, we ain't looking back, right? 50 is going to be support if we even test it. And we're going to go a lot higher than 50. But, we hit 46.5. So we just broke 40 just a few weeks ago. We got above 40 for the first time. And if you remember, what did I say? I said, once we break 40, we will make a beeline for 50. I said, we will get to 50 very quickly, right? And we are. 40 to 50 is happening a lot quicker than 30 to 40. That took a long time to get from 30 to 40. I mean, many, many months. And it just took a few weeks to get from, well, so far we haven't hit 50 yet. But I think we could easily do it next week. And by the way, look at the other precious metals. I mean, palladium, not too shabby, up 44% on the year. Look at platinum. Platinum was up 3.3% today, 12% on the week. That's the entire stock market S&P return for the year. Platinum did it in 1 week. Platinum's up 74% on the year. Now, we don't sell a lot of platinum at Schiff Gold. That's unfortunate. But, I was pounding the table because I wasn't really a big fan of platinum until earlier in the year when I saw how cheap it was. And on my main podcast, when gold was above 3,000 and platinum was still below 1,000, I was like, you got to buy platinum. You got to go to Schiff Gold. You got to buy some platinum because this is ridiculous. And yeah, look at how much it's up. It's still cheap. It's not as dirt cheap as it was, but I still think you're going to see some outperformance in platinum because it has a lot of catching up to do. And the same with silver. That's why I've been recommending so much silver, because it has a lot of catching up to do. And I think it's going to catch up because what's been driving the gold trade is central bankers. They don't buy silver. They don't even buy platinum. They buy gold because the central bankers were ahead of the curve, right? They could read the writing on the wall because they were writing what was on the wall. But now Wall Street is finally waking up to the reality of inflation. 2% inflation is a thing of the past. We're not going back down to 2. In fact, we're not even going to stay at 3. We're going to have high inflation as far as the eye can see. All the government can do is lie about it and hope we don't notice. But Wall Street is finally waking up and noticing this. And this is not the end of something. This is the beginning of something. So don't wait until Monday for another big gap up, right? And we had a little bit of selling at the end of the day. So the prices look pretty good, right, compared to where they were midday. Gold that hasn't been mined yet. These gold mining stocks are making a fortune, and they're going to make an even bigger fortune as the price of gold and silver continue to go up, right? They're not going to stop. And it's not just because gold and silver are going up. It's because the value of the dollar and other fiat currencies is going down because it can only go down. Before, the Fed was engineering a 2% decline per year, or at least they were aiming for that. Now the dollar is going to lose a lot more than 2% per year because the alternative, as far as the Fed is concerned, is worse. And certainly as far as the Trump administration, the last thing they want is air to come out of this bubble. So they need to blow as much air as possible, which means create as much inflation as possible. In fact, that's how you can sum up Donald Trump's economic plan. It's create massive inflation. That's it. Right? Create an illusion. Get the stock market to go up, right? Allow people to buy overpriced real estate. We just need to flood the economy with inflation, right? Cheap credit, cheap money, gun the printing presses, and then point to the stock market and claim that we have a booming economy. Well, the smart money knows that the stock market isn't telling the real truth. In fact, in terms of gold, the stock market continues to go down. We're in a 25-year bear market. The S&P, the Dow, 70% decline priced in gold. Year to date, gold is up 43%. What's the S&P up? 13%, 14%? That means the S&P is down over 25% priced in real money, right? So people are operating under a delusion. They think they're getting rich, but they're actually getting poor. Well, if you don't want to get poor, right, you got to protect yourself. You got to buy physical gold and silver, and don't wait. Don't worry if the price goes down. And we had one day this week. One day, we had like a $50 drop in the price of gold intra-week, and like a 40-cent drop in silver. And I was right on X. I put out a post right on the lows and said, hey, here's your gift. Buy, right? Buy this dip. There's not going to be many. And it was erased the next day, right? So you got to act fast. But, you know, a $50 decline in the price of gold, it's not even worth waiting for. We're almost at $4,000, right? $3,800 gold. $50 is nothing. It's not like it used to be. Yeah, when gold was $1,000, if it dropped $50, okay, I could save 5%. Who cares if it drops $50 now? It's 1.25%. It's nothing. Don't worry about it. Just buy it, right? And the same thing with silver. Just buy it. Don't wait.
The global financial system is built on a fragile foundation, a single reserve currency propped up by decades of debt that has never been extinguished, only rolled over and renewed. Since the dollar broke from gold convertibility, every cycle of borrowing has compounded into a massive structure of liabilities that cannot be erased, only devalued against real money. Inflation, once exported abroad through the dollar's reserve status, eventually must return to the source, creating a flood of rising prices when foreign holders can no longer contain their unwanted dollars. This reversal will not unfold gradually, but in a sudden systemic shock. In such an environment, physical bullion is essential, but it is not enough on its own. Holding assets that generate dividends in a future gold and silver-based monetary system provides a significant competitive advantage. Mining companies, as producers of real money, become a form of private central banking, capital that survives and pays out in the new world that emerges. When trust in paper collapses, only tangible production will matter. The timeline is shrinking rapidly, with accelerating market signals pointing toward a breaking point much closer than most expect. Let's get back to the interview.
There's only one banking system in the world because the dollar is the reserve currency. There's two sides. That's a double-edged sword. In a reserve currency system, you get to export your inflation, but then when that stops, then all that exported inflation has to go back to the source. It doesn't disappear; it just moves. Right? All the inflation that has been created since the dollar became the reserve currency is all still there. Debt from the 1950s and 60s, it's all still there. Why? Because it has to be rolled over. It can never be extinguished because we're not on a gold standard. There's no debt can be extinguished. This is what Keith Weiner talks about a lot. That without gold as the money or as the statutory money, I know it is money. I know naturally it is, and it still is. But without gold as the final extinguisher of debt, debt can only be rolled over. You're forcing yourself into a Ponzi scheme. There's nothing else you can do. So all the debt from the 1930s, 40s, 50s, ever since the dollar and gold were no longer convertible, it's all still there. It's in the form of bank reserves just rolled over decade after decade after decade, and it's all going away. And it goes away when it gets devalued against real money, which is gold. And then all those trillions of dollars of debt held by every country, all the trading partners with the dollar at its base. It's all one banking system controlled by different little central banks all over the world, but basically one banking system with the dollar as the reserve currency and gold underneath the dollar. And then when the dollar falls, all the currencies on top of it fall. And the entire banking system of the entire world that has now the dollar as the reserve currency, they all fall, everything. So yeah, what exporting inflation does is it delays the inflation. Well, when I say inflation here, I mean rising consumer prices. It delays the effect on rising consumer prices because you're exporting all those dollars outside your country, but they're still there. And when they will be sent back because China doesn't use dollars. They use yuan. That's their currency. So they have no direct use for dollars within their country. So then when the dollar is losing value, the best they can do is send it back to the source. And every country will do that at the same time. So yeah, all of the delayed inflation that the United States never experienced all comes to its door in a sudden flood of reversing the whole reserve currency situation has to be reversed. And it's not going to be gradual. It's going to be very sudden. I would say just forget about the dollar amount. Don't use mining stocks as a way to increase your dollar stacks. The reason I hold mining stocks is because First of all, I don't want to have only bullion. That makes me nervous because I don't know where to put all of it. I have enough for what I think will get me and my family through the end game. That's all. In a modest way where I'm not going to like be ostentatious or anything. I have no desire for that. It would be dangerous and also insensitive, and it's just not my personality to do that. Where am I going to put anything that I don't need for the end game, for end game needs? I would put it in a company that I know can pay me dividends in a new monetary system. So when I buy a miner, I'm thinking like I want to buy a central bank, and then maybe bequeath it to my kids when 10, 20 years from now when this is all over. And it will definitely be over 10, 20 years from now. I have no doubt about that whatsoever. I want a piece of capital that produces money, because with this end game, I don't think we're going to go back into fiat. I don't think it's going to be possible. We're going to have to deal in gold and silver for as long as it's going to take to rebuild trust in some kind of credit derivative of gold and silver. But it's not like people are going to immediately go back to paper, because like, look what just happened. It's going to take a long time. And in that time, you're going to want to have companies that can produce gold and silver and pay you dividends in the money that's going to be for the world at that time. The dollar built itself on many, many decades of legitimate commerce in the 19th century and early 20th century. And it was convertible. You could go to any bank and get your gold for your dollars. And there were problems, but they weren't as big as now. So, for example, when Germany and when Weimar was, let's say, duped by the Rentenmark, they were and they weren't, because ultimately it went back to dollars, and through some kind of derivative chain, the Rentenmark was saved by the dollar. But when you're talking about the dollar itself falling, there's no other derivative to build a system on, because that is the base credit derivative, again, reserve currency. When that falls, it's not a matter of not being able to dupe. If you look at the pyramid and then you take out the second layer of it, what are you possibly going to build a credit derivative based on? What? It can't be the dollar. It can't be anything else. It would have to be gold. So you'd have to have a currency that has been traded convertible to gold for long enough that people would actually say this is a convertible currency, because people are going to be so sick of paper money and derivative money, derivative credit for after this goes to hell. They're going to be sick of it. And they're not going to want to go back until I would say a full generation, maybe 20 years, that we're going to be trading money. And that's really going to slow things down. It's going to change life as we know it. I think it'll be okay, but it'll be very different from what we know now. I think we're close enough to the breaking point that it could be weeks. I think it's not going to be more than a year. I realize I've said that before, but it's the way things are accelerating now. It's crazy what you're hearing, and you look at the price action.
The direction of events is becoming undeniable. Each passing quarter reinforces the same reality. The financial system is losing its anchor, and tangible assets are reclaiming their role as the foundation of trust. Precious metals are no longer a niche hedge. They are transitioning into the core of wealth preservation. This shift is confirmed not just by market momentum, but by the unmistakable rotation into mining shares and the relentless demand for physical bullion. Those who recognize the signals early can convert volatility into opportunity, while those who remain tied to illusions of fiat stability may find themselves trapped in paper losses. This is not the end of a cycle, but the beginning of a new monetary chapter, one that rewards preparedness and punishes complacency. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.